where is the Bitcoin price heading? So I see a lot of on Twitter, is Bitcoin going below 90K in the coming weeks? Let's answer that in this video. So first thing first, as I disclosed in like my previous video, I had like some buy orders on Bitcoin slightly below 107. So in this zone, you know, to basically buy back a bit more Bitcoin, and the goal was to sell it in the middle of the range or a bit higher. So we had this bounce, then going lower. And I would say the main question is like, we had Bitcoin really a bit underperforming this year since I would say beginning of the summer, not doing much. And since beginning of the year, like we had the growth in Q1 and then not much is happening. And so people are now saying that Bitcoin is going back to 90K and we could have like more sell pressure, you know, some liquidations and all this kind of stuff. So my opinion is like, I'm not in a rush to buy Bitcoin. I think Bitcoin with the macro environment that we are having now is undervalued. I will explain why, but I'm ready to see Bitcoin be going below 90K. The thing that we have to keep in mind with Bitcoin is like with the ETF, a lot of flows are getting into Bitcoin. So it's like constant new money that's getting in, which makes the price a bit more resilient, a bit more sustainable because you have like new money getting in the market, right? Which is not the case for many altcoins. Then also the thing that doesn't help like Bitcoin in the last few weeks is like gold is just basically going full send, you know? So is the top on gold in? I don't know, but like I think a lot of capital will rotate from gold to Bitcoin, and like gold like added more than the market cap of Bitcoin in a week, like a few weeks ago. So it tells you like how big gold is compared to Bitcoin. And like, you know, we all know it, Bitcoin is like a digital gold, it's like an alternative to gold, alternative to like fiat system and so on. So a lot of money will get into Bitcoin just because a bunch of people will buy it. Another interesting play is Solana, that we now have like some ETF coming up. We had the first one enlisted. We have more coming up, probably more DAT and so on. So Solana is interesting because now we will have like a lot of new flows getting into Solana. What we want is like people that were not able to buy Bitcoin or Solana being able to buy it now through the ETF. So that's like we have constant buy pressure. And since we have constant buy pressure, on my side, once again, not a financial advice, I'm more into the game of like trying to add slowly key zones and then rebalancing. You know, for example, I sold a bit of BTC at $120. So around this like red zone. And I basically, you know, buying back here slowly. And if it goes down, I will accumulate. I would say on the short term, yeah, we start to see like a lot of funding rates, you know, really moving. So we start to see like people are less longing the market, of course, because of the crash, right? And we start to see people shorting a bit, you know. And so the longer it stays kind of like in this zone or like even going lower, the more people will short. And like if we have enough spot buy pressure, this will be the fuel to have the price really bouncing back, you know, significantly like we see those move in crypto. So another thing that I'm like really confident on Bitcoin is like, and of course, it's just like some models to have in mind, but basically there is like a bunch of models, quant models, more or less accurate, more or less overfitting, that basically aim at knowing that is Bitcoin overheating, you know, is like overvalued. And so if we look at all these models, so like there is like probably, you know, some of them, like one of the RSI factor in like weekly, like the whale ratio, this kind of stuff, none have been triggered to say like it's like could be a potential, you know. And I think that's something very interesting to point out. Second thing is like gold is reached like 30 trillion FDV, like market cap, which is the FDV, right? When Bitcoin is like sitting at 2.2, you know, these days. So gold is like 10x bigger, 10x plus bigger than, and so of course, like because gold like really overperformed, it make crypto less sexy, less appealing for people. And we just need like few narrative to basically get back the money into Bitcoin, and then that will help, you know, a bit altcoins, of course. I would say also why is Bitcoin poorly, so this is like the kind of like bigger view, poorly performing post FOMC, because we had a rate cut, which is interesting, you know, for the economy. I think having those rate cuts will help the economy breathe a bit, you know. My thesis is like we are in a recession, they are just super good at hiding it. But then we had a Powell pitch that has been like quite bearish, you know. For now, the 100 like this zone like is being defended, you know, with some wick and everything, because there is a bit of leverage. But for now, it seems it's being defended on the spot, on the spot side of things. So on my side, I think we're gonna have like a small bounce, a bit higher, and then probably having the price going lower. And like if we have some bad news or like some tariff like bearish pressure from Trump, I think we could see the price perhaps breaking a bit below here, and then we'll see. You know, this is where like you want to see like the smart money jumping in and so on. And if Bitcoin like goes, I would say mid-range, I would probably sell half of like like what I've purchased here, and like if it goes back here, I will sell half what I've. So basically my thesis is like, I think it's interesting. The price of Bitcoin is interesting, but not enough for me as an investor with already some crypto exposure to like keep it as a long-term exposure. The goal is to make some bucks shorter term, you know. Then few tweets that I have chosen to basically highlight my way of seeing it. I think, you know, the two main things we have these days is like gold overperforming, USD underperforming, and AI really overperforming. You know, we have Nvidia, which I think 5 trillion market cap. That is now 16% of the US GDP. If we take like basically the market cap divided by GDP and so on, it's insane, right? So it shows like the concentration of all these AI companies, you know, and people saying like we're in a bubble AI, we're not in the bubble. I would say that, you know, AI like has disrupted so many industries and is starting to really impact the economy. You know, we see it with like Amazon, like, you know, laying off a bunch of people, mainly due to AI. Many people like talented, you know, roles not getting a job because of AI. And that's why that puts pressure, you know, on the job market, you know. So we have like those tweets, you know, American job market faces its deepest pessimism since 2008. It's kind of like Great Recession. We have other tweets saying that the odds of like having a recession is going up. And I really like the tweet from QE Infinity here. It's like, we are just going to call this a recession. That's what I'm saying. I think we are in a recession. They are just super good at hiding it. The negative GDP definition is no longer applies thanks to money printing and out of control government spending. And I think the main stuff why crypto is struggling is because we have Trump fighting for tariff and we have Powell knowing he's kind of like in control of the policy he's doing, you know, because like he's following the agenda, you know, in terms of inflation and so on. But I think they are probably, you know, trying to soft land, you know, all of that and keeping a bit of margin of like, if the economy gets bad, like it gets worse in the coming weeks, they will basically cut the rates harder, you know. So I think Powell is keeping some margin here, you know, in terms of like how he's like pitching it, because definitely if Powell like jumps in and says like, okay, we're gonna cut the rates half a basis point next meeting, and we're gonna start to like do some move on like the balance sheet and everything, definitely like the risky asset will reprice very hard, you know. And you know, my thesis in crypto is like it's a macro asset, you know. So what we are waiting for is like to have like more QE and to have like a stimulus check from Trump, because when we get that, you know, it's gonna be crazy. And of course, you know, when you have that, it's already too late to be positioned. So that's why we want to be positioned and like be super, I would say, accurate in the things you buy and the things you trade. And if you already have exposure in crypto, perhaps the thing is to go a bit more into like not trading like the way you see it on Twitter, but more like, okay, I buy this asset and I want to sell it here, you know. Like I'm sharing like on Twitter, you know, like I shared like a tweet about an asset that I'm slowly buying, but if it goes like up 2x, like I will sell like perhaps most of my bag, you know, to play very conservative. And I would say, you know, for Bitcoin, the biggest narrative, and that's why, and I've been, you know, I've shared it, you know, I think during all this zone, you know, like, yeah, from really early May to even now, I haven't been like, okay, I want to accumulate more Bitcoin, but I feel, you know, the gold move is a move about currency debasement and collateral debasement. And I think we have Tim Draper saying it here, like Bitcoin is an important hedge against dollar debasement, and that Bitcoin will reach like 2050 in 2026, you know. And that's the main, I think, narrative for Bitcoin. And that's why I believe it will get a lot of institutional flows in the coming weeks, coming months. That will definitely also help like Ethereum, Solana, and then the altcoins, you know. But yeah, and if you're like, I would say, depending on like not a franchise, but depending where you're based and so on, it's interesting, you know, as an edge, you know. You should see it because people see it as a risk asset, you know, to basically take more risk. But Bitcoin, based on your portfolio, could also be something where you reduce your risk, you know, by being less exposed to like other assets, you know, kind of, and because it's really diversify a lot from the other asset. So yeah, that's the thing. That was the quant. So slightly buying here for a short trade, you know, if it bounced like a few percent, and like if it goes back here, I will sell what I've purchased because I have already some Bitcoin exposure, some crypto exposure, and so on. But I'm ready to see it like breaking down, and when it breaks down, we'll see like the leverage that will be flush here, you know. Perhaps we'll have some DAT forced to sell, all this kind of stuff, and so we'll see like where it will land. But the cool thing is like with the crash we had like 2 weeks ago, I think we flushed most of the leverage in crypto, and people haven't come back to really add leverage into the system. So probably the bleed will be slow and not like too violent. But yeah, that was the quant. Hope you enjoyed the video. New kind of format. Hope you liked it. Cheers.